most traders blow up their accounts because they can't stop staring at the Forex 5-minute and 50-minute charts like this one on the US dollar versus the Hong Kong dollar on the 5-minute or the 50-minute to do intraday trading on Forex, and then in 1 hour. They just can't stop staring at these smaller time frame charts because they believe they can make a lot of money. And it's true, you can make a lot of money, but also a lot of effort, a lot of stress, and a lot of losses you're going to have to have. So if you don't look at the bigger time frames, it's a problem. So if we take a look at the monthly time frame here, the US dollar versus the Hong Kong dollar has tapped and reached these strong and massive monthly demand level at 7.779. Every time this pair hits this area near 7, it just rockets up like the arrow I painted here on TradingView. It rockets up like it's just too much espresso, or like a rocket out of control. And when you look at the smaller time frames, you will know why this is happening now. We were having like lows and lows and lower lows, and then suddenly an impulse stronger than this high, another high, very large bullish pink candle in the 1 hour time frame. As you can see, the largest, well, ever, at least in the latest weeks. And we also have an imbalance here on the 1 hour trying to play out. But obviously, you will not be aware that this strong month demand level was reached on this Forex exotic pair, the Hong Kong dollar versus the US dollar. So, but not only this time, I mean, every time price reach these areas at 7, the monthly demand, the US dollar rallied strongly, but this time it is also supported by a monthly demand level. Okay, here we don't have anything here, but here we do have. So in the past we also had that one over there, and it rallied very strongly, and here as well. So what can happen after now? Well, we are expecting this, as you can see in this Forex exotic pair. So I believe that you should forget about intraday addiction, well, moreover, because this one is an exotic pair, Forex cross pair, and the spread for intraday would be huge if you are not trading in the opening hours, or when there is a lot of volatility and liquidity. So swing Forex traders should take advantage of this strong monthly imbalance on the US dollar. We are expecting the US dollar to get stronger versus the Hong Kong dollar in the following days and weeks and even months. Okay, this is a long-term swing Forex trade. So swing traders are the ones making money here while they are living their lives. So maybe you can ride this one or not, but this is a very nice trade setup, expecting that, backed up by previous imbalances. Okay, and they play it out. So we had to wait for a couple of months, yes, but now it's time to ride the US dollar versus the Hong Kongese dollar. So what happens here is that these exotic pairs are not too much traded by intraday traders, probably because of the spreads, but this is a great setup. We've got this monster demand, like I said, at 7.77, and it's trying to play out beautifully, hopefully, like I said. And when you take a look at the smaller time frames, let's take a look at the weekly. It could continue to drop a little bit until it reaches this massive weekly demand level, which is sitting slightly lower at 10 cents underneath at 7.76. So this is a sweet spot. So this is where institutions, or the so-called smart money, are quietly filling their charts, the trades, and this is what we're expecting. The first stop is here on the weekly, and the second one obviously at the top. So this also shows what I've been talking about for a long time in Forex, cross pairs, and also stocks and cryptos. After a very super strong, massive rally, okay, that happened during the beginning of May and middle of June, end of June, then you can see how this is very large candlestick body, even larger, smaller candlestick body, smaller, and then it drops It's always like that. Okay, so now that it reached that level on the monthly, this is approximate line for the monthly time frame, it's time to start buying. You can use swing forex strategies like supply and demand, even shorter term intraday and short-term forex strategies, the one that you're using. There are many that work, and supply and demand included, obviously. So let's get real. So most traders will look at the smaller time frames and they will miss these bigger time frames like the monthly and the weekly demand levels. So their heart will start pounding, wondering if it will make or lose $10 in the next 20 seconds. But well, let me tell you something. I always say the same. Life is too short for that nonsense. Okay, you can make a lot of money, of course, but you've got a family, a job, or maybe even a dog to walk, and they need to be taken care of. And while you're looking at the smaller time frames after a 9-to-5 job, using intraday, it's gonna kill you. Okay, and your blood pressure will be in the clouds. Okay, in the sky. So trading this monthly imbalance on the US dollar versus the Hong Kong dollar forex cross pair is like, I don't know, saying like being a chill surfer waiting for the big wave. You're just patiently enjoying the sun, enjoying the waves, the sound, the smell of the sea. So patience is your weapon, because when you catch this big wave in the shape of a strong monthly imbalance in this forex cross pair, you ride it for weeks, months, while the intraday traders are still glued to the screen with bloodshot eyes. So how do you play this? How do you do swing trading and intraday in this forex cross pair? So, well, you can swing it, okay? Swing trading on forex off this strong demand level. I mean, your stop loss should be around here. So you can double, triple your investment in a few months, a few weeks, hopefully. Or if you go to the smaller time frames, you can start seeing new imbalances on the 4-hour or the 1 hour, like this one over here, strongest one, okay? And it's trying to play out. So you can lower it down, drill it down to the smaller time frames, but, or even the daily. If price continues like this, okay, it's going to create a new imbalance over here. It's not there yet. And as I said, it could drop a little bit farther to this weekly demand level. But sometimes what happens when we have a bigger time frame demand level like the monthly here, and then a smaller time frame on the weekly, it will hit the proximal line or the areas at the top, and then from there react. Okay, so these are like nested imbalances. So the lower the time frame, the lower it will be. Okay, so instead of scalping and gambling away your sanity using the smaller time frames, why don't you start using swing positions on forex? So this is this way you get both of the best of both worlds. You get precision, laser accuracy, precision entries with long-term potential. So hopefully we'll start playing out. Always remember that trading should support your life, not replace it. Don't ruin your weekends with intraday addiction. Well, in this case, forex, you cannot trade it during the weekend, but there are hundreds, if not thousands, of cryptocurrencies that you can trade during the weekend while your wife or your husband has been abandoned, and your children and your life. So we're not here to win a video game. We're here to grow accounts steadily and stress-free. So let's see if this plays out. Hopefully it will. If you need anything, yes, contact me. If you like this video, click on the like button and subscribe to my channel, and you will be notified of the forthcoming analysis. Have a great day.